Hello everyone, myself Vaibhav, your host for Daily Stock. In today's session of Daily Stock, we are going to consider a pharmaceutical company which is also celebrating its 25th Foundation Day, the AstraZeneca, which was a vaccine maker of choice for most of the world just a couple of years back during the COVID pandemic. And as the COVID pandemic is now in past, we have seen that the AstraZeneca has emerged as a global brand for the pharmaceutical products. And even though its revenue from the COVID vaccines and related products have dropped, it has been doing well with other product launches, other drugs in the market with its strong R&D team bringing in newer medicines in the market. But despite this growth in the revenue and positive brand recall, we have seen that in the recent past, its share price is on decline, and even after the release of its quarterly earnings, the shares have dropped around 5 percentage point. I am not being precise here. I am just giving you a broad range. So the overall picture has been looking bearish, and I think it is likely to remain that way for near future because in today's market, the growth stocks, the momentum stocks, are continuing to trade higher, whereas the defensive bets like pharma companies, AstraZeneca included, have been on the back burner, and I think that is also one of the reason why the AstraZeneca is not doing so well despite its not so bad quarterly earnings. If we look at its earnings in detail, you will see that there has been growth in the revenue despite the decline of US dollar 3.7 billion from the COVID-19 related medicines. If we exclude these numbers, the growth of 15 percentage point is there in its total revenues, and the core EPS has also increased 15%. These are annual numbers, and if we go to the highlights of the quarter, the quarterly earnings are also decent. There is growth on the quarterly segment as well. Here you can see that the total revenues for the fourth quarter of fiscal year 2023 were at $12 billion, which is higher if we compare it to the fourth quarter 2022's earnings of $11.2 billion. And the company has been able to maintain its operating margin. If we consider the profit before tax, it is also on the upside. The margin has also increased just slightly, though that is not really significant. And after adjusting for taxation, the profit for the period stands at 960 million. If you consider these earnings and include the comprehensive income, you get these numbers of $1.7 billion for the fourth quarter compared to the 1.7 billion for the prior year. Now let us go into the details of how these revenues have been brought about for the company. The product sales were higher at $11.3 billion, and the alliance and collaboration revenues then getting the number to the 12 billion mark. The cost of sales is lower, so the company has been able to reduce its cost of sales. That has resulted in the gross profit rising substantially, though other expenses like selling, general and administrative expenses are on the higher side. The R&D expense is also on the higher side, so these have shrunk the operating margin. Otherwise, the cost of sales is on decline. After adjusting for the finance items, we get these 900 million number. Now coming to its cash positioning, how the cash flow is being generated. The company generated $13.8 billion from the operations, which is a significantly higher number if we compare it to the prior year's number of 12.3 billion US dollar. And of this, net cash flow from operating activities stood at US dollar 10.3 billion. That amounts to around 5% more cash inflow from the operations. But what is happening is that the net cash outflow from the investing activities is on the higher side for this year, for the fourth quarter of fiscal year 2023, and that is attributable to the recent acquisitions, and as a result of that, the company has spent more money on the purchase of newer assets, the intangible assets of its acquisitions, where the outflow of $2.4 billion is there compared to the 1.48 billion in the same quarter of prior year, and that has shrunk the company's cash flow. Out of the net cash flow after investing activity, we have these dividend paid, which is identical to what it was spending in the fourth quarter of fiscal year 2022. But if you look at the repayment of loans and borrowings, the expense is a lot more, almost four times of what it was spending in the in the fourth quarter of fiscal year 2022. This is one figure which we will have to go into the details of, because this is a big number, and I think you will have to read through the document, these results announcement, which is a publicly announcement, which is a publicly available document. You can access it from the company's investors relation page. I would recommend you doing that, because then we will have a clearer idea of where this money has been spent and how this is going to help the company in coming quarters, coming years, coming months. For the time being, it has reduced the cash flow for the investors, and it has resulted in the negative decline in the cash and cash equivalents of around $300 million for the company, instead of its cash and cash equivalent going up for the quarter. The company's net position is down on the cash side, reducing its free cash flow available to spend and distribute. Now let us go to the technical side of the story. And this is the thing I'm talking about. After making the peak just slightly below the 70 mark, the AstraZeneca has been consolidating with the bearish inclination. If you look at this long consolidation of almost a month, we have seen that this consolidation has now given way to newer decline. This decline of close to or more than 5 percentage point up in aftermath of its quarterly earnings points to the loss of confidence of the investors. Now, more and more market participants are feeling that the AstraZeneca is likely to remain on the sidelines of the growth which is there in the broader market. The momentum is not really helping the AstraZeneca stock in a current rally, And AstraZeneca is also a defensive bet when other segments of the economy are not doing particularly well. The money moves in these pharmaceutical companies. So now I think that is also one of the reason for this lack of growth in the AstraZeneca stock, along with its cash flow concerns. Now, let us look at it from the medium term perspective. In the medium term, the formation is also remain bearish since its peak of 76.5. It has been continuously making lower highs and lower lows, and this time around it is now again close to this prior swing low, and I feel that in coming sessions, in coming weeks, we will see newer low being established, and the decline below 60 can't really be ruled out because the momentum has been bearish, and I'm not really expecting the momentum to change much in near future. We will have to give it more time, and only when it starts to make fresh higher highs and higher lows, then we will be able to make a fresh assessment of thinking about buying it. But for the time being, as long as it continues to make these lower lows and lower highs, it is advisable to go with the flow and adopt a sell on rally approach as and when you feel that it has consolidated and corrected enough from its recent swing low, and now it is likely to start declining again. You can go for the initiation of a new short sale trade, and that is my thinking looking at its medium term trajectory. Now let's change it to the longer time frame with the weekly candlestick formation. On the weekly candlestick formation, you can see that in the longer term, it is not so bearish. It was actually quite a bullish stock for long time. If we go back to a couple of years to 2017-18, you can see it has continuously rallied, and in the process, it has also doubled. But now that rally seems to be losing steam, and here we have this extended consolidation. It is still not that bad for the stock, but I feel that it has lost its momentum, and it is not really showing signs of continuing its prior rally. Rather than that, I think we will have to brace for the possibility of decline toward this fourth quarter 2022 low, because if we compare the financial earnings, the numbers are not very different from what it was generating in that quarter. So there is this possibility of it declining again because it has not been able to live up to the expectation of substantial growth in the revenues. The growth is there, but it is not that impressive, and that is also causing some concerns among the investors and pushing its valuation on the lower side. So here you can indeed adopt a sell on rally approach, and just a couple of weeks back when it was consolidating and holding close to the 70 mark, I think that was a good proposition to short it. Right now, the shorting, new short sale trade is going to be a difficult call because there has been already substantial decline in last couple of weeks. But maybe in newer opportunity as and when it comes, we can indeed go for shorting it anywhere close to 70 would be a good price level to think about initiation of the new short sale trade. So that's my assessment looking at the price formation of the AstraZeneca after having seen its quarterly number, which are not that bad but not so good. So these are middling numbers, and here The outcome for the stock is also middling, which is now slightly tilted on the bearish side with this formation of lower lows and lower highs. I think the longer term prospects are no longer bullish, and though we can't really say that the stock is now totally bearish, it is still to decline 20 percentage point away from its recent swing high, but that mark, the 60 level, is not really far off, so we can consider this stock to be in a full-fledged bearish mode after maybe a decline of further 2 percentage points. So we should be gearing up for that kind of momentum. We should be positioning ourselves for profiting from this bearish tendency. So sell on rally is going to be a good strategy to adopt on the short term, on the medium term, as well as on the long term horizon, depending on the price formation and your candlestick formation. You can indeed play for the momentum, play for the bearish momentum. Now it's time for me to wrap up the session. If any of you have any query or any idea to share, do write to me in the feedback and I will be more than happy to take the discussion forward. If you have found this session useful for your trading and investing, you can write to me in the feedback and also subscribe to our channel for equally informative sessions which happen every day with me as well as with other webcast host. Now it's time for me to sign off. Thank you all for joining in. Have a fabulous time ahead. See you next time around. Till then,